to our debate this evening, and we're talking market mayhem. It's been an extremely volatile day. In fact, an extremely volatile month on global stock markets because of all of the doubt and uncertainty over, among other things, the debt crisis in the Eurozone. We were talking before the break about deeper political union, Ambrose Pritchard-Evans, in the Eurozone, and maybe that might be the key to restoring confidence in the markets. Do European leaders need to be more on the same page?
Yeah, well, first I'd just say that I totally agree that the European Central Bank could, if it stepped in massively, gave an unlimited commitment, did the sort of things that the US Federal Reserve has done, they could stabilize the situation. But that means completely abandoning their current policy, pursuing a much more stimulus, and it's been effectively overruled by the Bundesbank and then sort of the northern bloc of the Eurozone. So unless you get over that political hurdle within the ECB, you can't do it. Now, within fiscal union, I mean, yes, if you had a Eurobond, a European economic government, the whole nine yards, you could do this. The problem is, as Otmar Issing said, is what is the democratic structure to hold this to account? The risk is that you create these powers, but you don't have a fully functioning European Parliament or European government or federal system that can control it. And then you get the worst of all worlds, and you get a kind of deformed beast that's out of control and not answerable to any electorate.
In your view, was it a mistake to enter a currency union without the political infrastructure in place?
Well, that was the huge error they made. They assumed, I suppose, that there would be a beneficial crisis one day, and then they can make the quantum leap to political and economic union afterwards. That the currency would force the pace. The trouble is, we've now got the big crisis, but it's not absolutely clear that we will make the quantum leap. It may go backwards the other way, and that was a terrible gamble, and we're now going to find out if it will pay off.
Now, we have to go backwards or we have to go forwards. We certainly can't stand still. Mm-hmm. We've got to go backwards or forwards. We can't stand still. We have to have political union in Europe, or we need to get rid of the currency.
I mean, as I mentioned, I mean, as this has just been said, I mean, we knew in the economics profession that the so-called optimal currency area required this kind of thing, and despite the Germans at that time said, well, the euro should be a coronation on top of more political integration. Okay. So it was decided to launch the euro for political reasons. I won't come back to that. But and probably people hope that with time things will change. However, you had already, despite that, you had already people who were concerned. I mean, in Germany, for example, and no bailout, no monetization of debt, and the Stability Pact. All that made sense. Except that the Stability Pact, for instance, was kind of abandoned in the mid in 2003 or 2004, I don't remember, by both Germany and France. So how could you expect a small country to comply when the big ones are not giving the good example? So now all that has to be rebuilt if one wants to make the thing credible. For example, the EC had a European Commission had a proposal. The governance of Eurozone doesn't work because I won't vote a sanction against you if you misbehave with your deficit, because maybe next year you will vote against me. So out of 90-something non-compliance event, you had 0 sanctions. In order to reset the thing differently, they said, well, sanctions should be adopted automatically if there is a drift, except if there is a qualified majority against. Now, we don't hear about that anymore. So we still have to do with politicians. Politicians is democracy.
And they're rules that no one has to follow. They're rules
politicians is democracy. The market optional. Democracy is maybe something else. I mean.
All right, so Nicola, what do you think of that? I'm going to ask you a pretty easy question. Do you think these countries would be better off if they'd never joined the euro?
Well, I don't think so. I am a big proponent of the euro, and it's always good to, easy to look back in hindsight and ask that question. That having been said, I think that even within the existing constraints, the euro could have been managed much better. One of the suggestions we have made, for example, is for the ECB to use differentiated reserve requirements. Right now, the ECB only has a single blunt tool, which is the interest rate. And that is almost always by default determined by the larger member states and the prevailing situation now. For example, the ECB has been raising interest rates. Whereas what the ECB could have done, at least in theory, is to have raised credit reserve requirements for lending into Germany, which would have had the same impact in terms of reducing credit. These are tools that countries such as India and China use all the time. And having two tools of monetary policy in a union where countries are significantly different, they started at different points, they're moving at different speeds, would have helped reduce some of the imbalances that have built up. And even if this was not acted on in the past, this is something, in combination with better cooperation on fiscal policy, on industrial policy, etc. It's something that definitely needs to be considered. What is also important to remember is that the mobility of labor in the euro area is much less than, for example, in the United States, which is often used as an example. And linguistic barriers remain very, very significant. Things are improving as English becomes the lingua franca, as much as the French would not like to see that happen. But that will still take some time. I think that the place where we are now is where we need to decide which way we are headed. And I think heading out of the euro or a breakup of the union is still the much more disastrous scenario. And it's definitely much more workable, even if we do it half a step at a time, to move towards a proper monetary union instead.
I mean, because somebody mentioned the gold standard earlier in the show. That was abandoned, wasn't it? Is it feasible the euro could be abandoned?
Well, the euro is not the gold standard. The euro has the ECB behind it. The gold standard, you couldn't print more gold. You couldn't make more gold. Whereas we can, and the ECB has just with the Spanish and the Italian bond buying, can print more euros. So in effect, these are very significantly different situations.
Philippe, you wanted to come in on that?
Well, two or 3 points. One, regarding the interest rates policy in Europe, I think I don't buy that story, because you can find very big differences across states in the US, and you have a unique interest rates. What could be said is, when you spot not what has happened in Germany as opposed to what my colleague said, but what happened in Spain, for example, you see that there might be an exaggeration in credit distribution. Then you apply something like reserve ratio, something like that. But one must not forget it's extremely difficult, because I can be Spanish and borrow in France. So the second thing I wanted to say very briefly is regarding the comparison once again with the US and labor mobility. It is true that it's less mobile in continental Europe than it is in the US today. That is, it is slowing down in the US. That's
labor
not our
mobility,
issue.
Just explain that.
Language barriers.
Language is the barrier, right?
In the 50s and 60s, you had hundreds of thousands of people coming from Portugal, Italy, and Spain going to work in the north of Europe. Now we have people from Turkey, Eastern Europe, etc. So there is some mobility.
That's an interesting point. What are your thoughts on that, Fabrizio?
Well, I have to say that we shouldn't make the usual mistake that we do in Europe. When we talk about the euro, we talk about labor mobility and so on. The big issue now is the banking sector and finance. We are still struggling with the financial crisis, and there's been an underestimation of the effects on the debt of countries and the same sustainability of the euro. We have to remember that everything started with the inability of the Eurozone to tackle the Greek problem. Now we have wasted so much time without finding a solution. And after that, we had like a textbook domino effect. We knew that sooner or later we'd go to other countries, and this is what's happening. And we couldn't expect that it could go as far as France. But if we think now back, this is not so strange. And this is basically what's happening now, is that still the European politicians haven't sent a signal that they are in control of the Eurozone. There is no clear solution yet on the table, and until there is one, could be either the Eurobond or the ECB open-ended buying of Euro bonds, which is basically the same thing in practice, but it would be cleaner to do it with Euro bonds, so the ECB would be able to do its monetary policy independently. But in practice, in the short run, this is a very similar solution. So I think that I also have to say that now the claim of independence of democracies on fiscal decisions, this is a little bit ironic, because what's happening now that all countries are rushing to find very short-term solution to put in the constitution that the budget has to be balanced, and there will be much less flexibility than in an agreed strong rule at the Eurozone level or the European Union level. So I think what we have to say that there are politicians that are myopic. It is not what the population of Europe wants. The cost that we are going to pay for all this in action is going to be much larger than any fiscal cost of acting quickly on the Greek debt, finding a solution clear on how the Eurozone is capable of dealing with internal debt problems, problems of the Eurozone. So I think that to conclude, I think that the euro will not disappear, will not collapse. And the main reason is that even if the politicians are very myopic, especially in Germany, they will realize very shortly that the big beneficiary of the euro now is Germany.
All right, now
they are paying the very low, the lowest interest rate on the debt they paid in the last decades. The euro is actually weak under the pressure of the weaker countries of the eurozone. So the German exports have been highly competitive outside the eurozone, where they have gained market share. So as soon as they realize that actually it's not Italy, Spain, and Greece that really are desperate to have the euro, otherwise they would be destroyed as economies.
All right, Fabrizio, let me just interrupt you there. I want to put that to Ambrose. One of the points you made. Have we got to the point now that it's not that investors fear that politicians are unwilling to act, it's that they fear they don't have the materials they need to come up with the solutions? They don't have enough cash, to put it bluntly.
They don't have enough cash, but also I don't subscribe to this view that it's lack of leadership. I mean, there has been very poor leadership, that's true, but it's a deeper structural problem. I mean, the gap that's grown between North and South Europe in competitiveness is about 30% or so. You can argue about the details, but it's a very, very big gap. These countries in the South, their interest rates were cut in half when they joined the euro, basically. In the case of Portugal, it fell from 16% to 3% in a very short period, so they had a massive credit bubble. They lost competitiveness. We all know what happened. We can argue about improving the mechanisms of governance and so forth, but it's now happened. It's too late. And how do they claw back this competitiveness against a Germany that's continuing to compress wage costs? It's very difficult. There's an intra-EMU between the North and South, intra-EMU misalignment of currencies. That's the essential problem. They shouldn't be sharing a currency. Whether you break it into two blocks or how you sort it out, that's the fundamental problem. It doesn't matter how much leadership you have, you're not going to sort it out unless you go the whole hog to United States of Europe, which is not really viable because there isn't a political sort of desire for this, and the nation states, the historic nation states of Europe, are the legitimate fora of democracy.
So the euro should be abandoned, in your view?
Well, I mean, what I'm afraid is that we're heading towards a sort of spiraling towards a crisis in which there'll be a disorderly breakup. I think that'll be catastrophic. I think if the weaker states were forced out, you'd have a series of defaults. You bring down the whole European banking system and you cause a global depression. I think it would be extremely stupid to do that. I'm afraid that we're drifting into that. It'd be much better if Germany simply left, took out its satellite states. You had an orderly breakup, and the rest of the Eurozone kept the currency, kept the ECB, kept the institutions, kept all its contracts intact in euros. You wouldn't need these defaults. You'd be able to get a healthy devaluation. These countries could grow again. Within about 5 years, you'd have a very prosperous currency bloc under French leadership.
Pretty bleak outlook there.
Two things. One is, of course, something which is maybe, I forgot to say about this bond issue very briefly, then I come back to what has just been said, is that there is a competition between issuers, Greece, Portugal, France, Germany, etc. And that's one of the sources of the problem, because you have speculation and arbitrage. I sell Greece, I buy Germany, etc. This is one of the sources of a mess. The second thing is competitiveness. The dream of some people, if you have 17 countries, is to have 70 Germanys with the same level of unit wage cost. I mean, if you are in a union without an exchange rate risk, it is normal that some countries specialized in something, others in something else. If you are a country with a lot of services sector, health, tourism, etc., you don't make much productivity gains, and probably you will lose competitiveness regarding this criteria, unit labor cost. Maybe unit labor cost in Florida is trending up very, very much slower than it is in North California when they are manufacturing aircraft, Microsoft, etc.,
right.
etc. No one cares because it is a fiscal union.
They're all pulling
we
together.
are all
right.
going back always to the same issue.
And
there
just
is
briefly,
not enough federalism.
Running out of time, I want to know what you thought about what Ambrose had to say about the euro, about the future for the euro, how it can't work the way it is.
Yeah, of course. I mean, the governance, everything has to improve, and the appetite for it. But I think we have lost a lot of time, and as the predecessor in this speech said, I mean, probably the cost has been increased a lot because of some kind of wait-and-see attitude, hesitation, going to compromise, etc., etc.
All right.
It has been extremely messy.
All right, Sadiq Kafur, just time for a last word from you before we go.
I think that the leadership issue remains crucial, and we would not be in this situation had we got the crisis out of the headlines sooner. I think a fundamental understanding of what needs to be done exists, and all that remains is either giant leaders, not the pygmies we have had, or a desperate situation that is desperate enough to force the hand of leaders who are otherwise incompetent and procrastinate and obfuscate and have not been capable of handling the crisis. I think we're going to get a resolution one way or the other. I hope it will be in the direction of more fiscal federalism, and it doesn't have to be a 0-in-1 situation. We don't have to wake up to a federal Europe tomorrow. We can take incremental steps. For example, the new bonds that are issued, even for all countries, can be issued on a joint and several guarantee basis, with the idea that over the next 5 years, the institutional mechanisms for a proper fiscal union are put in place, and make a big distinction between existing bonds and new ones.
Right. OK. Sadiq Kafur, many thanks indeed. Ambrose Evans-Pritchard in London, Fabrizio Coricelli, and of course, Philippe Dalvizene as well. Thank you all very much indeed. That's it for tonight's debate. I'll be back at the same time tomorrow. Thanks for watching.